Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Today I briefly wanted to go over a poll that was released this week showing that nearly 50% of Canadians want the government or the Bank of Canada to raise interest rates as a means of cooling down Canada's real estate market. Nearly half of those polled wanted to see, or close to 50%, wanted to see rates go up so it would be harder to get a larger mortgage for potential buyers in the hopes that that would actually cool down prices. Out of the respondents that wanted the interest rates to go up, it's notable that a lot of those people were actually already homeowners who wanted to see the price of housing go down, as more and more older Canadians, current homeowners, are worried that their kids won't be able to afford a house in the future. And there's a growing consensus that the government and or the Bank of Canada need to do something to step in to cool down those prices. London, for its part, has experienced significant house price growth over the past couple years. In March of last year, the average price in London was around $450, and just last month it hit around $645,000. So that's a meteoric rise in the price of our houses. And I thought it was worth looking into seeing what would happen. What would the average affordability be in London were the government to raise interest rates? So I just want to go over the three potential rate hikes that the government could do and see what that would do to our average affordability. And then we'll follow up with some conclusions. So right now, the average London household can afford an average price of $540,000, and prices are about 20% higher than that. Were the government to up the stress test from 4.79 to 5.79, the average London buyer would be able to afford a home of $495,000. 20% over that, we're around $590,000. So we can see for the 1% rate hike from the government, our housing price would go down about 10%. So we're down from an average of $645,000 to about $590,000, just from raising the stress test to 5.79. Now, if the government were to raise rates by another 1% and the stress tests were at 6.79, that would bring down the average affordability in London to $460,000. Using our 20% variation that we still have right now, that would bring up the average house price to about $550,000. So we can see a 2% rate hike would bring the average price down to about $550,000, or 20%. So again, 2% rate hike, 20% lower affordability in London. Finally, if the government were to raise rates up to 7.79, again, these rates haven't been seen since October 2008, but just for a hypothetical, if the qualifying rate were to go up by 3%, the average affordability in London would go down to $420,000. And using our 20% variation, we would probably be looking at an average house price of about $500,000. So a 3% rate hike would potentially, and there's obviously intervening variables here, but it could potentially bring down our average price from $645,000 all the way down to $500,000. Still more than it was 1 year ago in March. Whether or not the government's going to actually raise rates by that much is yet to be seen, but it's also highly, highly unlikely. When the government raises interest rates, they have to raise it on everybody. So they have to raise it for businesses, for individuals, nonprofits. Everybody has the rates raised. This will take money out of the economy as people have to spend more money to borrow at a time coming out of this pandemic, or soon, hopefully, coming out of this pandemic, we need to start to grow the economy, and we need more money out there in order to help people invest and get their jobs back, and start to get back to pre-COVID normality here in London. So it's highly unlikely that the government is going to raise rates by 3%. With that said, this poll was widely reported, and 50% of the population asking for even interest rates to be raised, homeowners even wanting the market to be cooled. Well, that shows a growing consensus on the part of Canadians that they want something to be done to cool down the red hot housing market in Canada. More and more of the population wants to see prices go down, especially those with a vested interest in it, those who would actually hurt. Homeowners are wanting prices to go down. As more and more of these polls come out, it's probably going to be more likely that the government's going to do at least something to step in to cool down prices. Whether or not that will hurt London's real estate market, well, we've done a few videos on that, and that London's sort of a special case, with so many buyers from Toronto coming down to London and helping to drive up our prices. So what happens at the national level will not necessarily have an equal effect at the local level here in London, but it definitely could. And I think we saw when we looked at how much the affordability does get affected by a 1%, 2%, 3% increase, that it could have an effect on London's real estate going forward, and how much you'll be able to buy in London going forward. I hope you liked this video. If you did, please do click like and subscribe, and we'll have more information as it comes out on the mortgage market and the real estate market in London. Thank you.